now.
I'll retweet it then.
I just sent it.
We're streaming.
Cool. One sec, I'm just going to call Nico to send the email.
Is Nico a bitch?
Yeah.
Alright, he's going to send the email out now.
Alright, let's just stay silent here then.
Yeah. Alright, they can see us, I think.
Yeah, we're live.
We muted though.
Hey guys, how's it going? Hopefully you can hear the audio going here, and the video should pop up momentarily. So everyone can see the video now. Cool. All right, guys. What's up, Marcus? So yeah, welcome back to another weekly live stream here with Bitcoin Trade Group. So we have a special guest with us today. We've got Trader SZ. You guys may know him from his Twitter page or from half the Twitter pages on crypto Twitter whose charts look just like him. So if you see anyone doing Monday ranges or deviations or basically anything that you see that's, those plain price action charts with the light blue, you guys know who I'm talking about. It all started from this guy. So he's got a great website you guys can check out. It's just on his Twitter handle. I believe it's just tradersz.com. He covers crypto, Forex. It's inexpensive, and he teaches you kind of everything you need to know from marking up the chart from blank to actually executing trades. And this guy actually does it. He live trades. You can watch him live trade. So it's about as real as it gets. So what's going on, Trader SZ? How's your weekend going?
Not too bad, man. Not too bad. So good. How are you?
Doing good, man. We also got Trader Matt here as well, Mr. TA, Technical Anal, as you guys prefer to call him. So we're just gonna kind of keep this pretty open-ended today. We're gonna kind of let Trader SZ, give us his analysis on Bitcoin and anything else, that he might want to. So if you guys got Forex questions, anything like that, this is definitely someone you'd want to run those kind of questions by. So what I'm gonna do here is I'm going to switch the screen over to screen sharing with him. If you guys have any issues with the audio, with the video, let me know, and I will try and figure it out for you here. So give me a half second. All right, SZ, you want to put up your chart there?
Can you see my screen?
Okay.
Not yet.
So I'm gonna do this. Okay, I can see your screen.
Don't think it's showing on YouTube yet.
Should be showing any minute now here. So
There he is.
yeah, TA, let me know if it looks okay on YouTube, because I can't check in.
Yeah, can you increase it a little bit more?
Yeah, I should be able to see it.
There you go.
Yeah, you can see it. It's just maybe you can make it a little bit bigger if possible.
That's as big as it will get, unfortunately.
That's what you said last night as well.
You dig faggots.
Sure influence, mate.
Okay, shall I begin?
Yeah, we can
Give
see
her.
it.
Right, okay. Long, and I'm out. Done.
There it is.
Okay, so let's break down. So shall I break it down now? Ready?
Yeah, man.
Okay, so usually I like to start with the yearly charts. Okay, just to break it down from the yearly onwards. Okay, so I'm taking the yearly high to the yearly low for a little scalp. So I'm up at the range. Okay, so I'll high of the year, low of the year, and then midpoint. Okay, so I've already done the levels here. Here, okay. So just to see where we are. So we're above the halfway point. Okay, so that puts me on bigger time frame bullish mode. Below it, lower down. But that's just to start getting my bias. 3 month quarterly chart. The big level that stands out to me is this quarterly high here. Okay, so at one point earlier this week I was bearish. Okay, so at this point here I was bearish into there, and I was expecting a move down to the monthly open. It came down once, rejected, and then when it got back above, I had to cut it short. So once we got above, once we held this and created a consolidation, so here you got the deviation, of this low here, which happens to be Monday's low. That then put me on a bullish mode. So what I was expecting was, okay, the next pullback I'm looking to buy. So yesterday it came down here and they hit that, pushed up, and then I bought earlier today. So if you look at my Twitter feed, I had an arrow, squiggly lines as you do. And I've got a validation level here. So whatever it pulls back from here to there is a buying opportunity. So where do I think it's going next? I think it's going to these highs next. Okay, as long as we hold above this low here, which is a 10,030, we're going to probably go to these highs here into there. If this level breaks, which is the midpoint between the high of the year to the midpoint of the year, then that opens the gates for these highs into the range high. So basically, I'm just long, really. Okay, I don't see a bearish bias just yet. Short term, at least playing the range, okay, into these highs. And then if it breaks above here, then we'll see. So I've got a position on at the moment with my wrist there. So what do I do from there? I'm looking to compound. At what point do I compound? I'm going to look for this level here. So if you look at this level here, once it bounced and pushed up, that was the initial high made with a sharp rejection. So I mark that out as a range level or a SR level, flip level, key pivot. You can see it's resistance there, break above, deviates, backs below it, resistance, 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 same pattern again. So now that we've got more price action unfolded, what I'll be looking for now is if you can get back above here cleanly and hold, my validation level will go from there to there. I can compound on, looking for this target here. And that's all I've got for Bitcoin, playing it level to level. That's it.
Yeah, I agree. I think it's looking pretty good. I'd marked down that whole sort of downward move we've experienced from the 4th, where it's just kind of like compressing downwards. I was saying it looks like a classic reversal, and I'm basically just waiting for sort of a 10,550-ish kind of high, and then just to confirm that as a reversal, which kind of follows what you're saying here as well. And I think next time we get up to 11,000, it's not going to hold. I reckon maybe it might push us down like briefly, but I just think it's looking pretty much rinsed now.
I reckon, right? So for a bearish view, okay, well, if shit hits the fan, I think if we get below here, then it's probably downside. So this is a quarterly level, and as you can see, that quarterly level, even on the lower time frame, you can see how pivotal it is. At that point, I don't think it'll even stop at the monthly open. I reckon all the way down to 86.25, which is midpoint for the year. And if that gives in, then most likely 7.5k. At that point, I'll see what happens. So above here, so far it's bullishness, but break below here, that's when everything changes for me, and I'll go back to here.
It's interesting, that line actually, 865, because there's a tiny little cluster sitting on it on that time frame. I was like, yeah, that's the exact level that I'm looking at, but completely different view from what you've just drawn it as. But yeah, it looks like a pretty key level to me as well.
Yeah, they usually overlap anyway. You know, whatever system you use, if it's a key level, it'll overlap.
Yeah, so you guys will see I did a similar range. I drew out, if you take go to the daily here, SC, maybe on just a fresh chart. Duplicate, okay, I just learned something new.
Yeah, I fucking hate TradingView.
I'm so bad with TradingView.
Empty fall away.
If you take, or actually go to the H12, sorry, I apologize.
H12 is a meme.
H12 is the OP time frame. So go to the start of this big move up, the initial move from 93. So if you see those two down candles just to the left on the 17th? No, on the 17th of June.
17th of June.
You see those two down candles there? Yeah. So if you take the high of those two down candles and draw a fib up to the high of the next two down candles further up there. So from there to that next swing high. No, just to the swing high at like 10.8. Right there. I'm like drawing on your screen with my mouse as if it works.
No way. Why don't you just take the screen instead?
I could take the screen instead. That probably makes more sense. Here, let's do that. So what I'm gonna just illustrate here for you guys is I've got basically the same
trade entry.
The same levels here as God, I wish I was good at computers. My goodness. Okay. TA, do you want to just check the chat there, make sure everyone was able to see all that stuff correctly?
It's black at the moment.
No, I just mean, like, has anyone had any issues with? Should go to my screen in a moment here. Can you see my screen now?
Oh, everyone's saying yes, so yes.
Okay.
Oh, there we go. Now it's fine.
So it's what I like to always show you guys, because Mr. TA has his own intricacies to how he trades. So does Scarface. So does Trader SD here, as do I. But we always end up with pretty similar levels, which is I always find super interesting because we come about them slightly different ways. So if I'm to kind of build on SZ's analysis there, I kind of agree. To me, right, the bullish bias, I drew my range this way. So I did a big write-up in Discord about this, but the way I drew this range is I took from this high here to this high here, and then I put the midpoint in. And this also happens to be the August monthly open, I believe. And you get a similar effect, right? I mean, we go above the range here, above the range, but these levels remain pretty well respected. And this is exactly where I'm getting my bias from, and it's basically the exact same as what SC just kind of outlined here. So below this 1088.50 level, his was, I believe, 10,030. So we're within $50 there. That's kind of my bias for being a bull. As long as we're holding over, we bottom to the top. This seems like a decent pullback right into key SR. So this is the mid-range from here to here, but you can also see, it's a top there. It's the top of this order block here, creates a bottom here. So to me, I like this level. If you guys watched Crypto Cred's most recent video, as I know a lot of people on Twitter have, because they're changing how they mark their charts again, I believe this was his level, if I'm not mistaken. So if someone who watched that video can correct me, but I believe it was 1025, right? So the way he does it is it's, I believe, the lowest close. I don't know. Tia, are you aware of how he does it? I didn't watch that video, but I believe he marks the lowest close after a dump, right?
Yeah.
So lowest close after a dump, and I think that's a Dante thing. Regardless, this is within $5 of SZ's level, right? So there's multiple ways here for you guys to get the same level, and this is, again, right, this is a deviation below that level, and you can kind of treat the SR level like a range, right? Like, everyone learned how to draw ranges, and they're like, okay, deviation, now I'm hopping in the other side. You can have a level deviation too, right? So if price trades below a level and then quickly regains the level, you can consider that a deviation, which also defines your risk, right? So that's why SZ had to stop below that Monday's low. Your bias could be basically getting back below this level. So we're all thinking kind of similar things here. To me, the only thing I could see potentially rejecting price is coming up into here. And this is, I think, right where you had your targets there, SZ, at like 11.2 above these highs.
Yeah.
And this is also your meme triangle, right? All you meme triangle traders there. You could have like one more test of the high of the triangle, I guess, and then going down. But to me, my original idea for us potentially testing 7.5K, and the only reason it's not happening is because everyone copied me and posted on Twitter. So the algos picked up on that, and they're like, well, we can't go to 7,500 anymore. Too many people are expecting it.
Yeah. It's funny though, everyone talks about it as a certainty just because it looks good on the chart. I've been trying to tell people just because it looks good on the chart doesn't mean it goes there.
It could, but like, you know how nice that would have been, right? So anyways, I mean, my idea for us to come back here was, simply for continuation, but this is a pretty deep pullback, right? Like the top of this level here is 8,800 essentially. I think SZ's midpoint range was 8,600. So it came pretty close. This is like a 40% drop off the top. And the longer we stay here, in my opinion, the more likely it is that we break up from this consolidation. I think if it was going to dip, it's going to happen very soon. Like, I think if we're going to come down here, it's going to happen very soon, and then we're going to continue. Otherwise, I wouldn't be surprised if we see another like 1 to 2 weeks of kind of sideways and then some movement in October. And my bias, based on the high time frame, is to the upside. I don't see any reason to think that this is going to go back down to 6K. I think this consolidation here alone kind of discounts a lot of people saying, well, this top, this is an echo bubble, or this is a top and we're going to fully retrace this entire move. I disagree with that. I think this is consolidation. So I think, if we dip below, I would expect the low to get regained quite quickly and then continuation to the upside, or I think we just go sideways and then continue the upside. I think your, easiest play, if we do break below and you're worried about whether or not we're going to come back up, is you just take this low here, right? So if we sweep this low, maybe it goes into this block, maybe it doesn't. If we get below here and regain this level, that's when you kind of go big into a long, right? That's the exact setup that SZ just showed you on the low time frame, right? Deviating below a key level, regaining the level, his risk goes below the deviation, and then he targets the highs. That's exactly how you could enter this trade here. A deviation below the key level, regain the level, that's an easy long. And so that's a setup for your guys' kind of, playbook there if you want. I have a few setups that are kind of my go-to. This is kind of one of them. I always call it the low, right? Lower low, and then higher low. It's the exact same thing. So you should have a few setups that you like, and then you should look for those setups near key levels. And you shouldn't waste your time, trying to force trades that A, aren't at one of your key levels, and B, aren't, showing one of your setups that you can consistently see happening live. And so I made a post the other day on Twitter, and then I'll let Mr. TA and SZ comment here if they kind of agree, but I oftentimes will get too many levels going on my chart, and it happens, very easily. I start drawing all these levels, and then I'm zooming in, I'm drawing more levels, and I'm losing picture of, the higher time frame, I guess. So I had these levels on my chart since June, and as you can see, basically every swing trade, almost, was caught by one of these three levels. So why are you looking for a trade? And I'm talking to myself here. Why am I looking for a trade unless we're at one of these levels? Right? Why am I worried when price is in between levels and consolidating? If it's at support, right, I should be looking for longs. I should be looking for a setup. And so that's what you got here, right? When we had the low here, I had a long setup down here. I didn't end up getting long here, but when we got to the key level, right, now's when you pay attention. Here, if you're not in a short from here, wait until you get here to look for a trade. Wait till you're at a level where you believe there's going to be reaction, and then you can zoom in and then find a setup. So this is something that I still struggle with to this day, and it's a majority of the time in crypto is I don't like missing moves because, I spend a lot of time on Twitter and in Discords, and when you see people catching all these moves and you miss one when the market is volatile, it can be annoying. But my best setups come from ones where I have an alert at a key level and I look for a setup at that level, as opposed to trying to chase a move or just hop in when I don't really have the context. So sometimes it's nice to zoom out, clear your chart like SZ just showed you. Start at the yearly, go down to the 3-month and work your way down, and then find your key actionable levels.
Yeah, I think the thing is like support and resistance lines is that you tend to have so much mess coming on the chart, and you just get lost in knowing what's what. Obviously, you can just draw, add the little text to it. But for me, my style of trading is based more on previous swing, and I look at unfilled orders remaining at areas of supply and demand. So I just use the boxes to denote what is a key level in that most recent swing. So that's kind of how I get over that issue, to be honest. But when it goes back to key levels, I think a lot of people don't really know what a key level is, and I think SC has helped a huge amount of people with these ranges and dictating where to look on the chart to take a trade from, where not to. And it's kind of helpful to figure out when price is in midair and when not to do anything. Not that it stops anyone, you know. But my whole thing is, if it hits a key level, I'll trade it. You know, if it'll bounce price, and I'll trade it in the opposite direction. Or if it breaks it, then I'll look for a continuation in the direction of the break. But around those key levels, you don't really want to be doing anything if you're flat in the meantime. So like now, I think if you're looking at that, you know, we're kind of in the middle of that entire range. So you'd probably wait for either a tap of the top of the range to short it, or break the top of the range and then go long, right? So it depends on the price approach and the momentum going towards it. But yeah, for me, I look at things completely different to you guys, but we kind of always have the same levels because we're looking at key areas on the chart where big sell-offs has happened or big buying has happened. But you know, we get that from different points. So it's funny when I see people. Well, it's not funny, but you know, it's a completely different view. Like what you've done now, I would look at that as a break of that resistance level, that little box you've drawn, and then I'd look to the level just above it and mark that as an area of demand, an area of support.
Yeah.
Rather than holding that on my chart for God knows how long, but I just look at the most most recent swing.
Yeah.
I think it's also important to know what is the market doing as well, because every time it comes to some little buying opportunity, people think, oh, it's going to go to the moon. You got to remember, we're still range bound. It ain't gone anywhere, you know. It ain't broken out just yet. So I think it's important to just don't expect massive targets. That's why I'm playing a level to level until it breaks out. Give me the screen.
Yeah.
I'll give an example of what I mean.
All right. Let me know, TA, if that goes up there.
Someone said, Marcus, how FAP impacts on your trades? I guess he means how does wanking? What the fuck kind of question is that? FAP wanking. Why is he asking that, man?
So, but back to identifying, we're still range bound. Nothing. I mean, like I said to you, with this, you gotta remember, until it's broken out, for example, cleanly, for example, the range I've marked out, until it's broken out, for example, these lows here, or cleanly above this level here, it's still range bound. So if we look right now, a lot of people like to use higher highs and higher lows. What's this doing? This is doing fuck all other than up, down, up, down, up, down. So for me personally, within a range, I identify what is the key level that's, holding the market. If we look, where's the range capped by? It's actually capped by, to the upside, is this level here. And if we look, okay, any movement above that level is short-lived. So above it, deviation, short-lived, get back below it. Here, short-lived. So the majority of the trading is contained within here for now. So even now, that's why I'm saying when I've got my targets, it's going to be short-term. So what's the next resistance? It's up to there. There, you don't just aim for the moon, say, 15K, 12K, 13K. I personally think a possible scenario I'm going to mark out now is there's no why we can't just do this. So if you look back at your charts historically, how many times did this happen? Just remove the emotion aside, go logically. It's clear that this is the level here where the stops are going to be resting, whatever you want to call it, into there. If we get something like this, what is that? I mean, the range mode, they don't think. Just either wait for it, either clean bust out through there, or play back down to the range. No problem, sidetrack there, but yeah, you get the picture what I'm saying.
No,
so just keep it range bound level to level until proven otherwise. So short term, where's the market held? It's here. So this is the deviation here. So until we get a clean break below here, and I said previously, if it breaks below that level here, that's that quarterly level, and break of the quarterly level. So let's look at what that level looks like. So if you've got a picture, or if you've already keep your eye on massive bigger levels like this, you feel more confident on holding a trade. So for example, say if we look here, this level, and what's the level here? 99.70. So a lot of we get caught up on what the smaller time frame is saying. But if we look right now, if we had a quarterly close below that, that would be mega bearish, and this would be just a deviation of that level. So we've already retested once here. We come back down to it again. So remember, if a price keeps coming down to a specific level, and that is a very bearish sign. So if we look past, we came down to a deviated, come down to a deviated. Now on a higher time frame, it'll take the piss. But this time, with overall context in mind, rate of these highs here, if it comes back below here, that takes it below the monthly open. At that point, I'd say go into swing trading environment, because we've been in a massive consolidation for ages. Consolidation leads to expansion. So this time, I reckon if it deviates that high and then drops, I'd play it short below here, back into the quarterly level. If that breaks this time, probability-wise, most likely, I think then we'll get a big down move.
Yeah.
Very good. I think, do you know one thing which I think would help a lot of people? I think it's something I see mainly in Bitcoin trading, is a lot of people focus on the price axis. And so when people start looking at, oh yeah, let's break that high, and then suddenly we're going to $13,000, that it really doesn't help, because I think obviously Bitcoin has got that history where when it gets moving, it really does get moving, and that's not just up, it's down as well. So when something looks relatively bullish, people then start thinking of these dollar values in their mind. But you've got to look at the market conditions, and you're absolutely right. We are in a ranging market at the moment. So if you're taking a long here, you would be aiming for the next logical support, rather than thinking, oh, okay, well, as soon as it shows some sort of strength, it's going to go up to the new highs at 15K again, for the new yearly highs and all that kind of stuff. I don't know if you guys have noticed that as well. It's something I kind of keep an eye on for throughout Twitter, particularly.
That's probably. Oh, sorry, carry on, before I get to
it always seems to be a focus on that when, because people are looking to try catch these moonshots where it's like, well, if I get in with a really tight stop down here on a lower time frame and it's starting to look strong, I could end up catching a $1,000, $2,000 rally, when really what you should be doing is what you've got up here and looking at the most recent high. I've got a long idea in the group, and it's just a little bit lower than that, because I've seen, obviously we're putting in lower highs in this range, so it makes sense just to target a little bit lower. But in terms of like textbook logical target, that is it, that high up there.
Yeah, that's probably because in general, crypto today especially, you've got guys trying to teach people, been trading for a year, they ain't got no experience trading the market, and that's just fact. And that grows into a lot of people in this stream right now. They're probably new, or they don't know how to trade. So the knowledge they're getting are from people only trading themselves 1 or 2 hours. I mean, in my group alone, how many paid group leaders are there? There's loads. They ain't got a fucking clue what's going on. I'm not saying I got a clue, but I've been in this long enough to understand, whatever market you're trading, understanding a range environment, understanding a trending environment. And what people feed off of is that opium, moon, this, that, the other. So all logic goes out the window. I think that's a core problem.
Yeah,
I agree.
I think I've talked about this before in videos. The problem is people have an emotional attachment to crypto, because it's either made them a lot of money or lost them a lot of money, maybe a little bit of both. And that's something you don't have in Forex, right? Like if I have $1,000 Forex account and I don't trade for a week and I come back, my account's still worth $1,000, right? If you leave crypto for a week, the value of your BitMEX portfolio can change drastically. So I think there's this inherent kind of attachment to the value, like you said there, TA on the axis there, being like, oh, well, Bitcoin's worth 11K, 10K. So in a lot of ways, this makes Bitcoin one of the best assets of all time to long, because when you long it, you're getting more Bitcoin, which is also increasing in value. So, I mean, obviously that's great, but I try and tell people this all the time, right? Like if you're trading Bitcoin, right, you need to treat it like any instrument, and you need to play it level to level. Like, of course, you want to catch, the swing from, let's say we break out here to new highs. Like, of course, you want to get long at 10K and hold it till 16K. The chances of you carrying the entire position that entire way is very low. Unless you're buying and selling spot and trying to catch those monster swings, for the most part, you should be taking price off at logical levels. And then, yeah, maybe you leave a bit on for the moonshot. But if you're a trader, you're scaling in and scaling out at logical levels, and until proven otherwise, you're not really setting these breakout swing targets. So, there you go. Wouldn't you love to just get this long on the 30-minute chart and just hold it till $100,000 Bitcoin? Like, of course. With a stop like $400 away and your target is $5,000 away. So it is funny to see on Twitter, and you're like, oh, people are holding. Any time price makes a small breakout, people, like was just said here, they lose their minds. You can play the breakout. Like if we're going to go to 16K, let's say we break out to the upside, we're going to go to 16K. You can just get long once it's confirmed that we've broken out and now we're getting into swing territory. You don't need to try and guess, on the range. And you should play the range until it's not a range anymore. I give the example all the time of the initial bear market. 6K was a buy 5 out of 6 times, and it worked, right? So that's the range low. 5 out of 6 times you buy the range low, you make money. And then on the 6th time, it's no longer a range. It's a swing trade to the downside. So you take 6 trades, you get 1 wrong, and then you now flip bearish. So you can do the same thing here, right? Keep selling the range high until it actually breaks out, and then get long.
Yeah,
or
I think
just
it's also. Go on, mate.
no, I was just gonna say, or if a lot of you listening right now, you shouldn't be trading anyway. So if you're gonna go in the middle, if you've got a long term, view on this, right, just hold and don't do nothing. I'd say keep the investing side separate. Trading, people are bringing them two together. Long term investment, buy and hold, don't trade it. A lot of people they'll say that, but at the same time they'll use that Bitcoin to trade it as well.
They'll buy their entire and sell their entire spot holdings based on like a 1-hour chart, and it blows my mind. And then when price starts going up, they freak out and get emotional. I was like, well, that's because you have no exposure, right? And I say this to everyone. I was like, you should have investing and trading separate. If you want to learn to trade and you've got 10 Bitcoin, use a percentage of that, and sure, go ahead and try and trade it. But for the most part, you're better off just looking at the very highest time frame charts and holding, that Bitcoin, because the chances of you, especially while you're learning, of outperforming just the uptrend that we could be in here is like slim to none.
Yeah, and then even if you are trading it, I mean, the examples that you guys have shown with where you've got that line and then you've got a deviation below it, and then it's like, well, okay, then you buy it once price breaks above the support, back above the support, then you buy it again. It's almost like the same, like, people think, oh, it's so easy. Okay, so let me show you my education. You draw a support line, break price, deviates below it, and then it gets back up, then you buy it. But can you imagine, like, you buy the retest, but you can see how rounded the whole thing is, and it's not as simple as, like, as soon as it gets back on support, you buy it, because then all your emotions are going, when it comes back to a red candle, you've probably bought a top rather than a logical area. So as easy as it even looks to trade this, like these strategies, even that in itself is you don't think about the mental side of it. Like, you always think, okay, I'll wait for a pullback, and then it doesn't come for like 3 M15 candles, and you're like, oh fuck, I've missed it. Okay, let me just buy it, and then it comes and drops down to the level, and it's those kind of things which people don't really appreciate about these. I mean, it looks so simple on that chart, and I'm sitting there going, okay, well, that's similar to a type of strategy I've got for momentum following. But I've learned down the years that, you as soon as you get those green candles, you just want to buy. And, particularly with Bitcoin, you're thinking, okay, well, shit, I've got 2 H1 candles that are green next to each other. Fuck, okay, I'm going to miss this train. I have to jump on now. I think that's a huge problem as well that people go through. And I think, again, it goes back to fixation on price and not actually looking at the current conditions of the market and what type of market we're currently in.
Yeah, I think that's why I think it's funny when people use not that there's anything wrong with indicators. I know lots of people use indicators well, but people who are like, oh, RSI did this, so therefore it's a buy, right? Because that doesn't give you any, unless you understand price action. How do you determine your targets, your risk management, where are you placing your stops, where's your invalidation, stuff like that? How do you do that with an indicator? Maybe someone can tell me, if it touches the bottom of the Bollinger Band, is there a rule where you put your stop? Because to me, a lot of those indicators are lagging, and they could be good for maybe indicating trend and stuff like that, but just use your logic, right? If it seems too good to be true, it probably is, right? Like if everyone just puts the 200 weekly moving average on, we all bought the bottom. And I have people who be like, well, yeah, I did, man. I had the 200 DMA and I bought 3,100. I was like, okay, so why aren't you fucking, millionaire by now? Why the hell are you talking to me on Twitter if you could just catch every bottom of every asset and just hold it forever and not get shaken out of your position? Like, it's just silly. It's not easy. I think that's a common misconception of trading. It looks easy, but when it's real money on the line, it changes everything. When you have your stop in place and price is close to it, but you're not stopped out, are you staring at the chart considering market closing? Right? Like that's stuff that you just got to learn from experience. It's stuff I've gone through all the time. Like when I was learning and price would go against me as soon as I entered, I would close so many trades at a loss only to find out it worked by closing it before where I was actually wrong. And so, these are things that people who have only been trading 6 months for a year, they're still dealing with or haven't even really, learned to manage yet.
I also think people just can't think for themselves. I think what doesn't help is we'll never see four figures again. We'll never see this again. Shut the fuck up, man. How the fuck do you know Marcus going to do this for that? And even though you may be joking on Twitter, there's going to be people out there believing that because why? You've got a high following count. And if it doesn't go, oh, I was joking. When you come across people, you definitely can't do this, definitely can't do that. Say the fuck up if you don't give a fuck. You are.
Yeah, trading is.
How do you know Marcus going to do this, that, the other?
Trading is. Trading is very much a if this then that kind of game for me. So whenever people are like, oh, so you're saying it could go up and down, it's like, well, not exactly. I'm saying if it goes through this level, I think it's going to go up, and if it goes below this level, I think it's going to go down, and you have a scenario marked out for each direction. When people draw a level and they're like breakout and then retest, it's like the chances of it actually breaking and giving you that perfect retest are so slim, right? If you're in crypto long enough, the breakout and retest trade is not super high expectancy. It almost never gives you that perfect retest when it's trending.
Yeah, be right back. I'm just going for a piss. 2 minutes.
Yeah, no worries. We'll just wait here silently.
You got 110 people listening to him.
Well, let's see if there's any questions here. I'm gonna switch back to my screen. Does anyone have any questions here? Everyone misses Scarface. How FAP impacts on your trades? I don't know, man. Go look up. Fapping means jerking off. How FAP affect your trades? I mean, don't FAP onto your keyboard. That will negatively affect your trades. It already went to 8K on Kraken. Did it? Do I even have Kraken? It called is it's XBD on Kraken, isn't it?
Is it? But then you got to see if it does one of those weird flash crashes, how much actual
you mean look at this?
Bottom,
That's hilarious. Wow, that's a wick. Well, I mean, let's be honest. I just got a new tweet that I'm going to tweet out now.
Holy shit.
Right into the weekly order block. Price
seriously, is that any buying or selling took place
price
there?
Delivered. The low is 8,000 on the dot.
No chance. So, no chance there was any orders there getting picked up.
If I had to analyze this, I think this is what's coming next. That's funny. Okay, what else do we got here? What's your opinion on break in weekly market structure, slight on weekly closes? Maybe that was the initial sign for us that it wants to go up. I know Scarface likes the market structure closes. Break to the upside. So to me, market structure hasn't broken to the upside, right? This is your low on the weekly. We closed above there. Like, are you talking about this here? Like this per Scarface, right? This would be a break to the upside. So, I don't know. I mean, this is a good level, right? You take the low of the week there, you draw that out. How many you get 3 solid buying opportunities, right? So imagine just one level on the weekly. That's your high time frame level. Bullish until proven otherwise at 95.30. That's your thesis for high time frame. So every time we come down to this level, you should be looking for one of your bullish setups. And don't take a trade any other time other than that. That could be your entire way you've traded this range if you wanted to, and you would have probably done better than trying to play all the chop, right? So once we start uptrending here, breaking highs, you just get in on a pullback, and then you start targeting old highs. So you can really make your trading complicated by trying to do too much. So that was kind of my point of my last tweet, was just that, like, mark some key high time frame levels where you think price is going to react and look for trades there. Don't worry about the rest. So let's see. So I don't know if I answered your question there, Kit. Sorry. October 16K screenshot there. Hot take from Amir here. You must have just read that on Reddit. Is this Scout Sniper 5? Yes, this is Scout Sniper. I've upgraded to Corporal Sniper, actually, though, after completing the mentorship. Can you look at the...
An ICT joke?
Yeah, it's an ICT joke.
Okay, I missed that one.
You wouldn't understand, bro. You can't... Can you look at the low time frames? Sure. What do you want to see?
Yeah. Tick dot shot.
I don't think I have the 1 minute. I think I have to upgrade the 1 second. See, like, I don't like this low of a time frame. 15 minutes too low for me.
I hate day trading Bitcoin. I prefer swing trading Bitcoin.
Yeah, day trading Bitcoin is a scam.
I think day trading is a scam full stop.
Yeah, on Forex too, man. The low time frame on Forex, you'll get absolutely wrecked. I see all these guys who scalp like the 5 minute chart on Bitcoin, and they try and go over to Forex, and they get absolutely ruined. Scarface is on vacation. A man can dream, right? Sure. Trading it slow on Binance is different than trading it leverage on BitMEX. Absolutely, Justine. Does anyone have any questions? This is all just like people talking to each other.
Newer people. Signals.
Yeah. What are the thoughts on flat candles on BTC? Save 4 hour. Do you need to be retested as in FX? Do you understand that question?
No.
Leave that for the live trades. Essentially.
Do you guys believe in ICT's 5K to 250K challenge in 2 to 3 months? That's some unrealistic. Heard about MT4 white label license. I don't know, man. I don't pay attention to what ICT tweets, to be honest with you.
Yeah, I don't know about that.
You know how much he tweets? He tweets about
5K. You can do it, but you need a trade setup every day, and then you need a strike rate of something at least 75%.
No. Just ask that. Ask me how long I am. That guy.
Yeah.
Ask him.
Ask me how long I am, exactly.
Just send me funds.
God, that ask me how guy scams some people hard, man.
I'm worried. You know, like the next time Bitcoin starts trending up or down, and you've got all these degens just getting $100 account and opening like 100x positions and just trying to, over and over and over again, just until they catch one of these moon shots.
You know what? I've no sympathy for people that just give their funds away like that. Fucking deserve it.
Oh, it's called Darwinism, right? Like,
what the fuck is it into a cartoon on Twitter?
Yeah.
He's not around anymore, is he? No one knows where he is, right?
Yeah,
gone.
Let's look at F. F moved today, so.
I haven't looked at Ethereum in a while.
Yeah, dude, it bounced pretty good today.
I did
that XRP bounce. That's all that matters.
Yeah, XRP. So I mean, I had this level. Like, this is right. Just again, key weekly level here, and it's like this is where you look for a setup. Why be bearish until this level breaks, right? Like, to me, I don't know. I posted this on Twitter in July. This is as low as I see Ethereum going. It could go lower, but my analysis was basically the lowest it would go is 153. And then continue. So
I actually sort of agree with that. I think we probably got a bottom in. You know what I genuinely do sometimes? I look at, sometimes if I'm not clear if we're gonna have a bigger move or not, I look at some of these majors. For example, I look at XRP USD, Litecoin USD, Ethereum USD. When they complement each other. So for example, say if Ethereum USD is setting up for like a long-term buy, then likelihood Bitcoin's probably gonna rally as well.
Yeah.
So I think I'm probably going to bottom in. So I've got short-term targets in Bitcoin. I'll probably start trading my stops if that's the case.
Yeah, like again, like I think 66. Like I think if we get back below there on Litecoin, be worried. But until we get below there, I don't know. To buy, this is an uptrend, right, on a high time frame. This is a high time frame swing. So you got to remember, right? Like, let's say this is the start of a bull market, right? What you want to see is that, right? But you can get very distracted in this part. Being like, oh, it's going down. It's like, yeah, but this could be making a higher low on the weekly for a now monster leg, right? So to me, the smart money here is longing Bitcoin USD, longing alts versus USD, like Ethereum, Litecoin, and stuff at key high time frame levels, if you're trading alts versus Bitcoin, it's like, what are you doing, right? Does this not look like a more easy environment to look for longs and make money in than trying to long something like this? Like that's what's fucked is instead of longing Ethereum over the last year basically, which it's been in an uptrend, people are trying to long this. You know what I mean? Like every one of these green candles has been alt season. Go to your favorite Twitter influencers page on these specific dates, and you will see alt season ? Like I'm long alts here. Go look at Satoshi Flipper's page and how many times he was long Link.
Yours now. You're my favorite crypto Twitter influencer. I'm gonna see how many times you call for alt season.
I only tried to catch the F Bitcoin bottom twice, and it didn't work either time. I think I logged it. I longed here. I longed here, and I caught a nice move, but then it just fucking. I was like, oh, this could be it, and turns out it wasn't.
Yeah, I jumped in on that as well.
It was a nice swing.
Stop loss.
But you want to know when you get long like this coin, like when it flips these levels. Why try and long?
You just don't want to touch them until it does something. Like just the way it keeps dropping and dropping. It's like, do you know what trend is?
Well, but it's just funny. It's like
it bottoms out.
This is a better trade. Like the dollar pair is a better trade.
I agree. I didn't. Cointelegraph asked me to do an article, and I said I did it. Maybe I'll post it on my Twitter. Like last week, I said if it gets above $180, I think that's it. The bottom's in, and that's got past it,
dude. Right there, and then once it gets past, this is exactly what I would be looking for. I would see a move to just over 200, right? Back down, and then you want to long the next move up right into like 180. It might test 180 again. Because if it clears the top of this level, if it clears 200, I think it's going to like 260.
Yeah, I've got a nice long setup on Ethereum.
Is that only for the paid group, or can you share that here?
Yeah, sure. Give me the screen. It's obvious. No, nothing.
It's obvious. All right, get ready to see 7 different interpretations of this long on Twitter tomorrow. People are gonna be like, I'm long based on the deviation here and super obvious trade.
Ethereum's gonna be trending in the morning.
Yeah.
On Twitter, though.
Wait, let me get my orders in first. 1 second.
Yeah. Get the order.
Just WhatsApp it to us quick, and then.
London hold for 6 months.
All right.
Mayne, just mute the mic for a second so we can get in on it.
Yeah. All right, you're good, bro.
You know what? I'm fucking starving over here. I'm at McDonald's.
Fuck off and make a steak. Don't be a pussy.
Well, I'm coming to see you at the end of this month. Get a steak.
So, okay, let's look at Ethereum now. So, again, do the same thing. Let me look at what the year is doing. Okay. So, on the quarterly chart, right, what have we done? We've rallied. So, we came down to this low here. Okay, so this was we broke out, we had a retest there. It'll become more apparent on the lower time frames, but this low led to the all-time high. We came down, we deviated it, one attempt above it, another attempt above it, we got above it, retested it to the tick, impulsive move. So what we've got now is just a retest of this quarterly high here. Still early days, but okay, let's go down to the monthly now. On the monthly, what is this? This is just a deviation. It's a retest, higher low. If above, obviously, say this was a 5-minute chart. If above this low here, and that's sort of confirmed. So let's go down to the weekly. And the weekly, we can see it's starting to turn. It's early, but it's starting to show positive sign. So at what point would I say, see, it works in probability. So when it's at this low, you can start scaling again. When I see this, so this is my confirmation level, the breaking market structure pattern I use, okay? It's just the same thing on a lower time frame. So when I see this, today it's just broken out. If you close it above, that becomes my validation level. So low, deviated it. Just show them weekly and monthly. I think that's if you close like this, I think that's a buy. Risk would be this low here, because if it comes back below, you're wrong. Where is it going to? This level next. And if it breaks above that, then the same thing repeated.
Go back to that original view after this bit, sorry.
Which time
Before
frame?
you're done. I think you're on the daily. I couldn't see because the screen's kind of blurry.
This is
No,
the daily.
Can everybody see my chart?
Yeah, you can see it. Yeah, no, it's just I couldn't see.
So
what's going on.
if it was to do this, then that's further breaking structure, and that becomes the deviation. That opens the gates for these lows here, and then the midpoint is going to be the magnet for price. That's often the magnet for price. So I reckon if target one there, if it takes it out and then rejects, then that's into resistance and a breakdown. A clean break above that opens the gates for these highs here, and this is what I mean by level to level. So it would be this level here. If it gets above that, the same thing repeated into there.
Yeah.
Gets above that, then there. So I just play it to there, level to level, and that's it.
You guys should all watch this last 5 minutes here because this is a very good strategy, and you can build an entire strategy just using this exact entry setup and then flip it on its head for shorts. And you can make an entire model around a setup like this. This is what I mean when you should have like setups. What he just showed you is high time frame levels of interest, and then using a concept to determine how can I actually now get in on the low time frame. So what you're trying to do on the low time frame is predict the continuation of that higher time frame trend, right? So you want to look for low time frame shifts in market structure that lead you to believe that the higher time frames are going to continue that bullish market structure. So that was super informative. You guys should definitely rewatch that.
Something called or something similar to what about 3 years ago called the space technique. I don't know if you've heard of it or even if you've heard of it. Basically, there's these guys. They do higher time frame trading. You know, they're millionaires, so they don't focus on intraday bullshit.
Are they on Twitter posting?
No, they're funny enough, they're not on Twitter. I don't know what's
weird.
One of them is trade one is it?
Oh, he sounds like a bit of a twat, to be fair, so I wouldn't follow him.
Agreed.
But basically, what they do, the way you've got that, that's me not getting a steak now, isn't it? The way you've got that moving up, right? So you get these shifts in market structure, and then I think it's what you kind of talked about earlier as well. So it's like bumping your stop up, but also adding size onto your current position. And what they do is every time it breaks another high, if they're longing or if they're shorting, it breaks another low, they'll add to the position and then they'll move their stop down and just catch the trend like that. And they likened it to, if my memory serves me correctly, something like adding legs every time onto like a centipede. So you keep adding positions on and then you're just like following the entire trend. And at the end, you'll just get stopped out in a massive profit.
It's similar to what I did doing FX, my normal trading. I'll give you an example here. So for example, say, this is just on a smaller scale, but it's like SPX. I started a position here. As soon as it broke structure, that means I got a new invalidation level. So for me, the way I think about it is in terms of where am I wrong. The moment I've got a new invalidation level, I can trade my stop, add whatever I've reduced to buy, add whatever I've reduced to buy. So for example, say I started a long here, and I had a wider stop. I had to stop there. When it broke above this level here, well, that tells me that, okay, where am I wrong now? I'm wrong below here. So that stop shifts from there, added there. And if you look back at my Twitter feed, you'll see about 4 or 5 positions on. It looks like massive positions on, but really, all I've done is reduce the risk, add. And it's just,
Same thing, yeah, that's it. Yeah.
Instead of holding just one position, if you've still got bias, why not milk it for as much as you can instead of just holding one position and say, oh, I bought it there and I rolled it there. Whereas, hang on a minute, you're missing out on.
I know. Well, that's what some people don't understand about swing trading. I think it's because they get into crypto and they're like, I want to long Bitcoin at 3,000 and hold it till 20K. When in reality, you can long it from 3 to 4, scale some off. You're now realizing profit, adding again, bringing your stop up. I know people that will hold the position the entire way. They'll trail their stop. You can get stopped out and profit. That's definitely a way to do it. But if you've caught the trend and you know what you're doing, what you should be doing is not just trailing your stop, but taking off and then re-adding on continuous breaks to the upside or downside. If the market's showing you a willingness to continue trending, why not take profit and then re-add? Exactly. That's how you catch those monster swings.
One way to think about it is the way I used to think about it. Okay, so I think it's a shift in mindset as well. So for example, say you were long here and you got out. Then think about, okay, what if I wasn't long? So for example, say this is how I first overcame it. I know it's a simple thing. It doesn't take much, but I had to think like that just to change my outlook on it. So say if I was long here, I used to just catch that and then hope it would be there. But in actual fact, if you're long here and it breaks out and you got a new violation, think of it, okay, if I wasn't in the trade and the prices are right here, how do I get around? Just think of it as a new setup.
Yeah.
If you think of it as a new setup, for me, that changed my mindset, made it easy for me to add. And it was just something simple like that. But you do whatever it takes for you to think of it like that. But yeah, carry on.
Kyle just said adding most of the time doesn't work on a lower time frame. So bad at adding, always end up break even or like no profit. And I kind of think that I put a tweet up about it during the week, a video about the need for precision and the desire for perfection in these things. And it's kind of, I don't know whether, I think pretty much every trader I know has gone through it, and it's basically, you want to get in as tight as possible, and if price starts moving away, you then you FOMO into it and all that kind of stuff. But when you're doing that technique, I find that you want to see you've got your invalidation level. You put your stop above or below it, depending on whether you're long in or short in. And then you want to see price retest it potentially, and then show a bit of strength if you're longing, and then you add to the position, and then you still got your invalidation level. But in my opinion, a lot of people, again, trying to be too tight with it, and they are looking at lower time frames. But the lower time frame should be used, in my opinion, to refine a higher time frame level. So if you've got an H4 cluster, where are you going to trade it, right? Okay, so you look down to H1, and then if you can't find it from H1, you go down to M15 or M30, blah, blah, blah. So what I'm going to say is, yeah, like those invalidation levels are perfect in adding, moving your stop up or down and then adding position. But I think the other question you've got to ask yourself as someone trading this, not you guys, obviously you do it successfully, but is you see this trend forming, and you get greedy because you've got to think like, well, if this keeps going, I could go and add thousands of pounds into my account. So therefore, I'm not happy unless I have thousands of pounds at the end of this thing. So you kind of see something move up, and then you could be like 200 quid in profit, and prices coming down to your invalidation level to stop you out at 200 quid in profit. And people kind of freak out at that point and move their stop down or move their stop up or whatever the case is. So it's kind of like, in my opinion, you've got to also set realistic targets using that strategy. It's not easy, and you have to watch it on a higher time frame, because it's the same as like any trading, right? If you start looking on the lower time frames, you're going to get your emotions being pulled all over the place, when really like an H1 candle could look fine.
I'll give you an example. Now, for example, in this trade I'm in, yeah, I've got invalidation level there, but I'm not going to let it go to my invalidation level. So, for example, say I've got a mental stop here. I don't want it to go below here because of the structure that's formed. So with this trade example, I've said a clean break. If I wasn't in the trade right now, how would I get on board? If I wasn't in the trade right now, clean breakable, retest, I look for a long there. So even though I'm in the trade from around here, as soon as that happens, my new invalidation level is going to be this low. It shouldn't really go below there. But with Bitcoin, I'm a bit wider with my stops because the spikes that happen. So whatever I reduce my risk by, whatever percent, I'll just add it above there. The next level trade I get, if it gives me that, I'll add it again. So I'm thinking of it like this. If I'm not in the trade, what's my setup? It's down here. Yeah. So that means I can reduce my risk from there to there. Whatever I've reduced it by, add it. But not going crazy with the risk. Just add on. Say if I've got 1% risk at any one time, if I've reduced it by 50%, so I'll add that 50% position back here because I've reduced my risk.
House money as well, isn't it?
So many people don't even talk about trading like this. It's so funny. It's just about like, okay, well, how do you, like, we're going to see 10 different Twitter threads and YouTube videos on compounding your trades now, because no one knows how to fucking do it, right? And it's just like, this is something that you don't see in crypto, because crypto people, usually it's just like, I'm just going to buy this here and hold it till here. And hopefully it's fucked. When I made a mental shift in my trading is when I stopped looking at trades in terms of what I could potentially make on my account if I'm right. I focused on what's the worst case scenario if I'm wrong. And that really helped me. It was not focusing on, okay, well, if it gets to here, I make a Bitcoin or I make $1,000 or whatever. It was, okay, if I'm wrong, I lose $200, $500, whatever your risk is. And I think that helped me psychologically not get stressed out when I'm in a trade. We're near my, invalidation level. I know what I'm potential to lose going into it. And the thing about your targets is, obviously take some off at the target, but you can do exactly this. You can trail your stop up and continue the trade So it's better to play level to level on the upside, but for me, focus on what you're losing. Worst case scenario if the trade goes wrong, and I think mentally that will help you a bit.
Yeah, I mean that's kind of almost like the first thing traders should be taught by anyone, isn't it? It's like if you enter a trade, stop looking at reward. You should be looking at the risk. Like if you've got $1,000, £1,000 in your account, how much are you going to risk? And okay, once you've put that trade, you and I have talked about this before. As soon as you enter the trade, like that money's gone. Like you've just lost money. That's my mentality when I enter a trade, and that's how I overcame sort of emotionally, the expectation being reduced and the emotional outcome of that trade was just heavily reduced.
Yeah,
the compounding thing is so
key,
powerful. Like when the market starts moving again, it's something that everyone should be doing. Compounding their account, adding to it. But the thing is, it's not a popular strategy because you can't get that RR tool life on there. You can't put your level to level and go, look how great I am. You want to look more into your account where, okay, well, it's broken that level, I've added onto it, and holy shit, like it's still going. And whatever the worst case scenario is now, if this trend reverses, my stop is in profit, and okay, I may not
and you've realized a bunch of gains already.
Yeah, and you might look at, oh well, it went up 5%, and my stop, I could have taken that extra 5%, but at the time, realistically, when you're up that 5%, you have your invalidation level, and you sacrifice that if it comes back down and stops you out in profit. Like, yeah, you could have got that 5%, but you've got an invalidation level for a reason. And then the beauty of that trend following is once that invalidation level has been hit, you have got on the next trend. Your bias can change like that at pretty much the earliest possible point. So if your invalidation level's been broken, then obviously what's going to happen? Well, price is going to move down, right? Okay, so now you look for shorts. So I think it's a super powerful thing. It's not the right conditions for it at the moment, absolutely not. But yeah, it's something that doesn't get a good. I've seen a lot of tweets about trailing stops manually and putting stops in profit, and I think there is a degree of getting stopped out in profit is a bit of a cop out depending on that person and their rep and their trading style and whatever and what they're trying to gain from it. But it's the same with the whole break even thing as well. I will move my stop to break even after the price has got to, let's say it breaks to the upside and breaks resistance, and then that resistance holds as support, then I'm happy to put my trade at break even or into some slight profit to cover fees. So that gets a bad rep, but the same thing, like compounding it and moving your stop, for some reason, isn't a cool thing, but it's your trading account thinks it's cool, put it that way.
I think it always comes down to like the setup. Like now that we've said that everybody's going to try compound on every single setup, it's about, for example, like I've got a target towards 9,000, say for example 11,000 or 200, right? I'm not going to compound at 11,200. That's my target. So on the journey towards that, because that's my target, and you got to give these, good reason for it, then you can. So it's about when to compound and when not to compound. If it's a trending environment, okay. But if it's a tight range-bound environment, well, you're gonna get chopped up trying to compound. So I think the main thing is understand the context you're in. So in this sort of context, right, the target for me is 11,200, and that's proven with the market still being range-bound. So know when to compound as well. It's not just that's my validation level, I'm going to compound. So okay, I've still got room to go towards my target, so I can compound. But if you don't have room to go, don't start compounding just because you've seen somebody compound.
Yeah, I think as well, like you could potentially do it like on, if this is looking like it's going to be a range breakout, and you have a logical target, and obviously you have an invalidation level based on lower time frames. You can put your stop below a cluster, and you can set a TP, but if it's got strong momentum, you can say you make two decisions: do I TP here or do I trail my stop and potentially miss out on that final percentage of the move? But then you're also allowing yourself to keep the trade open and ride for a lot longer. So it also obviously depends on your trading style and what you're happy with taking, what profits you're happy taking, and obviously at the same time the strength of the move.
And how do you guys think you trade price discovery, right? Like, So for Bitcoin, this is obviously going to be super relevant. When we broke, let me go to Coinbase here. Maybe the 12-hour will let me go back that far. Right when we broke the previous all-time high, whatever it was, like 1400 back in 2014. This is all new price discovery for Bitcoin, right? Am I in the right spot here? Once it's over, I don't know, wherever the previous all-time high was. I don't see it on here. But how do you think you can continue to catch as much of this uptrend to 20K as possible? You know what I mean? Like, are you just going to buy it and try and hold it the entire way? Like, if you're trying to trade this uptrend and you have no future price, you could pull a fib on a swing and say it's going to the 168. I think that's bullshit. I think you play it like market structure wise, right? Just like they showed you with, trailing your invalidation up. You can do that in this uptrend through price discovery. Have key levels, and when that key level is broken, okay, well, now where's my new invalidation point? And when it breaks another swing high, I now have a new invalidation point, and then maybe you get stopped out. But then when it breaks another, high and shows you that it has a willingness to continue the trend, you can be playing the uptrend because you don't know when this is going to stop, right? We're not in a range-bound environment here where it's like, okay, we're in a range. Here's the top of the range. Here's my target. We're in an uptrend and we're in price discovery like we could be, or have been in Bitcoin. How do you think you can trade? You can do exactly what we were just talking about there in terms of trailing your stop up as the trend continues to show a willingness to go up more and continue to make new highs.
Yeah, because I think as well, like a lot of people, when they see it moving up, they get into that habit of looking at resistance and thinking that needs to be shorted. But, a very good way to counter that, especially when it's moving up, is like you said, just moving your stop below key levels. I think so many people are going to be fucked on that next move up. When it gets to price discovery again to the upside, so many people are going to be fucked.
But I think there are probably ways around it. I mean, but obviously it's just probability. For example, say, one way up to 1.8, 127.2, 200%, but taking equal measured move, for example, consolidation. So if you look at, for example, say the yearly chart I showed for Bitcoin, showing the range high, range low. So if you take the mid-range to the range high and you measure that up, if it's moving in those consolidations, for example, if it's moving in a $500 consolidation, you add the $500 consolidation onto the highs. So that's one way of overcoming it.
Yeah.
Obviously, discovery, what can you do? So
measured moves work really well in trading.
I tend to use a confluence. So, for example, price discovery you can only do really with Bitcoin, really, because it's an immature market. But with them, I use, for example, the ranges I use. If you look at the ranges from high of the year to low of the year, you get the mid range, the range high, and then the midpoints between that. But it's obvious the market is moving in that particular range. So if it's moving in $500 range, add $500 onto the top, add $500 onto the top, and if it's confluences with fib extensions, then that's sort of one way to overcome it.
It's also like indicate the average true range, isn't it? It's the same kind of thing, the measured move. But the other thing is obviously moving averages, waiting for them to catch up, and then putting your stop below certain moving averages. Because that's the best thing to do when it's trending. That's like that's what that tool is for.
Yeah. So does anyone have any other questions, anything like that? We're getting over an hour here. Yeah. Probably call it.
I'm getting hungry as well.
Yeah, me too. Everyone's asking SC if he uses indicators. What part of the last hour made you think he uses any indicators, man?
Yeah, he knows indicators. I like to use the indicator.
Yeah, the indicator. Can SZ mark up XRP, USD, SPX, WTI, crude oil for $70 a month? He'll mark up whatever you want all the time.
It's £77.99.
£77.99, whatever that means in real dollars. Strength on USD, guys, thoughts? Yeah, I think we explained that. We're pretty bullish, I think, long term, or at least here for F.
I don't mind marking up one FX instrument.
Okay, let me just go through the questions and then we'll do one of those. I have a noob question, but don't want to ask here. Okay, feel free to ask or DM. If you're entering a long-term position on alts, how do you compare the risk of alt BTC versus alt USD? I don't fully understand that question. Like I said though earlier in the video, right? Alt USD setups right now look way easier. Why are you trying to long alt BTCs, which go down 99% of the year and then briefly go up? Oh, he just retracted his question. Regardless, I mean, just play the market structure. Forget so much about what the instrument is. And if it's an alt versus BTC, go on the high time frame, mark the price floors, and wait for price to regain one of those floors, and then look for a long to the next floor. That's all I would do. You know what I mean? Like if I'm looking, like if I want to have a bag of Cardano or something, if that's kind of what you're asking, I want to go on the high time frame, and I want to say, okay, well, where is an easy trade on Cardano? Well, if we regain these lows here, right? I think there's going to be an easy trade, potentially up to this low here. Like that's how I would play these alts, because there's so many times where we've bounced, and it's just been a bearish retest of the previous level. So I think I had FBTC. I mean, this one is, why are you trying to long this until it regains here? This looks good closing above here, in my opinion, right? Previous floor, we close above here. That's when I would look for a long there. But, this looks more bullish to me. You know what I mean?
It's starting to look good. It's starting to look good.
It does look good. What is SG's win rate?
With crypto, they all look the same, don't they? I mean, one move, all start moving the same.
They all look the same, exactly.
That's why I only look at Bitcoin and Ethereum, to be honest.
Yeah, I've given up on trading these fucking alts, man. I just trade Bitcoin and XRP only. I mean, obviously XRP is going to take the number one spot soon. So.
Yeah, so he doesn't use indicators. Can you talk about ways to manage your risk? Hopefully we covered all this. It sounds like we did. Okay. Okay.
Have so many questions on managing. Just fucking read a risk management book, man.
Yeah, go read CryptoCred's Medium article. Does anyone have? So what instrument do you want to mark up to finish the video here? What's your choice? Crude? Do you want to do the SPX?
Everyone's fucking talking about crude at the moment. I've never seen any chart on it.
I like the CAD yen.
You like what?
CAD yen.
Okay.
So if oil is going up, usually oil and CAD yen have a correlation.
Why don't you pull it up? I'm going to share your screen here.
Okay.
Okay, this will be the last thing, some free alpha here for you guys.
One question. What point at Alt USD different to Alt BTC? I don't even know. Like, do any of you boys know that?
What's the question, sorry?
At what point alts against USD different to alts against BTC?
Well, it's a fraction, isn't it, right? Alts versus BTC is completely different, right? And alt versus USD is that altcoin's strength relative to USD. Alt BTC is a completely different fraction. You have BTC as a denominator. That's why you need to use that BTC dominance chart when you're trading altcoins, because if the denominator of the fraction, alt versus BTC, is strong, so the BTC dominance chart is going up, what does that likely mean for the alt, the fraction? The fraction's getting smaller, meaning the alt is likely downtrending. That's why those two charts are inversely proportional, or correlated, excuse me. So you should be looking at alt relative to BTC different than alt relative to USD, in my opinion. They share the same numerator, but one depends on the strength of Bitcoin. Hence why when we have alt seasons, usually Bitcoin is ranging, going down, right? Not when Bitcoin is on a bull run, alts versus BTC get crushed. It's as simple as that, right?
I take that to mean, like, at what point do they start moving relative to each other?
I don't think they usually don't. Go look at the alt. Use Ethereum, right, for your comparison. Go look at the FUSD bull run and compare it to the FBTC bull run. They happened at different times. Anyways, CAD yen, a true shitcoin.
So with CAD yen, as I do quarterly charts, okay. So we can see that if we look here on the bigger time frame, so I start getting a picture for it like this. So we can see that this is a key pivotal level support, deviation above it, deviation, support. But what stands out to me this time is respected nearly perfectly and pushed up. Now, if we zoom in a bit, we can see that. If you remember, if you follow me on Twitter, you'll see I posted a dollar yen chart. It was similar to this, where it got above previous quarterly low. Okay, see, when I do the quarterly charts, the moves on this are going to be big moves, like hundreds of pips. Well, I need 50 to 100 pips on that, and that's enough. Even if I'm wrong, bigger picture, I'm going to get some sort of reaction off of that. So the fact that we're above this automatically puts me to bullish mode, with the context higher low as well forming. So I'm bullish oil, I'm bullish CAD. So I'm working towards the monthly open. Okay, so I just look at this, get some sort of bias off of that. Now if I zoom in, okay, I break my market down to ranges. So the range we're in is, that is the high, that is the low. It's proven, that's a deviation there, resistance there proves that the range high I'm using, this is the key level, not that high, not this high or that high. This is the level they can't breach. Every time they breach it, they come back below it. Range low here is proven down here, deviation, deviation, deviation. As soon as we're above it, automatically bullish mode. Historically, every time it's gone above it, a couple of hundred pips move up. Couple of hundred pips move up. There's no reason why we can't do it again. And coupled with this, I'm expecting bearish yen as well. So the combination is going to be CAD yen strength. So if I look at this now, okay, if I was to look at this and you would ask me, where am I wrong? I'm wrong there. Well, that's too much of a wider stop. So what can I do in the middle of that? Well, previously, if you look, it's gone up, it's retested it there. Could it retested it? Possibly. So this is when my entry technique comes in. So I've got an SR level there. I know that that's had a big reaction. I don't know. It could come off there, push up. It could come down to there. This is where the confirmation comes in. So if I look right now, breaking the chart down further ranges, we can see that this is a key level here. It's a support level, call it range low, whatever. So there's two scenarios. Now I don't pick the bottom. I let the market tell me when the bottom is. If it comes into there and pushes back up above it, then that's a deviation of this low. So any retest, that would be a buying opportunity. If it comes into there, shows me the bullish price action, similar to here, what I've just shown, that would be my long. But as long as we stay above here, that's going to be my bullish case. And target-wise, I'm aiming for this level here, which is the H260. After that, it's going to be these highs here, and that's it. Which lines up with my bullish oil view as well. So if oil goes up, usually CAD yen goes up as well.
I think there's going to be a nice opportunity pre-open tomorrow.
I reckon so. Also, if you look at some of the yen pairs, I mean, CAD yen's one. I mean, dollar CAD, I think this is going against me. You've got Aussie dollar, Kiwi dollar being quite strong. I think dollar CAD shits the bed hard. And if you look at all the yen, for example, dollar yen took off, euro yen, pound yen. Usually, if you look at all the yen pairs, they usually, if one is lagging, the other will catch up. I mean, I've got a lot of fundamental reason behind it and a lot of reason, but I think CAD strength comes in. Could be wrong, but then that's where you work, think into the probability. What do I need to see to increase the probability of the trade? I remove the guesswork of, oh, I'm going to buy here. No, if it does this and then gets back above, then that's the low in, and then we should head higher. So this price action unfolding would increase. So when it's increased, instead of having a validation level there, my validation level is there now, and with the bullish context in mind, yeah, that's it.
So it's funny. People don't realize, like, this is just like an altcoin, right? Like when you're, I mean, in that you can look at cross pairs to make, additional confluences between the pair that you're trading. So if you're looking at the dollar index because you're trading a, dollar-based pair, it's no different than, looking at Bitcoin's chart and the Bitcoin DOM chart relative to, an alt versus BTC. It's all fractions, right? It's math. Anyways, I think
probabilities.
Yeah, exactly. All right, guys. Any other questions? BTC up, alt, BTC up, alt's down. Okay. Copy and paste what Bullshrimp said.
H1 Bitcoin chart. Look at that. Gun to your head, up or down? What do you reckon, boys? End on that.
Up.
H1 Bitcoin chart.
H1, yeah.
I think up.
Okay, I think up as well.
Yeah. All right, guys. We will. I'm just gonna close off. So yeah, we'll end the stream here, guys. So hopefully you guys enjoyed that. Feel free to check us out at Bitcoin Trade Group. We do this stuff every day. Trader SZ, you can check him out on Twitter as well. Also check out his website. He's covering the markets every day, live trading, crypto, FX, the whole 9 yards. So we will be back again sometime this next week with another one of these group live streams. If you guys have any questions, anything like that, feel free to DM myself, the group page, Mr. TA, Scarface. Yeah, I hope you guys have a good weekend, and we'll talk to you soon.
Bye-bye.